Hey there, folks. Welcome back to another exciting episode on the Investing Iguana, your go-to platform for everything you need to know about investing, whether it's in Singapore or further afield. I'm Iggy, your friendly and well-informed Iguana host, here to dive into the day's thrilling topic, the significant rise of Singapore T-bill to 3.99%. A crucial question arises, should you consider this as an investment opportunity? For our fresh faces, don't forget to click the subscribe button and the bell icon to stay updated with our latest videos. If you find this video useful, make sure to give it a big thumbs up and share it with your buddies. Your support means the world to us. Let's get down to the brass tacks. Have you been wondering about the recent buzz around T-bills? Let me enlighten you. T-bills, or treasury bills, are short-term government bonds sold at a lower price than their actual worth. These are guaranteed by the trustworthy Singapore government, known for its solid AAA credit rating. T-bills, considered one of the safest investments, are issued with durations of 6 months or 1 year, with the smallest bidding amount being 1,000 Singapore dollars. Intriguingly, the interest rate for T-bills isn't set in stone but is decided through an auction process. Bidders have the option of competitive or non-competitive bids, with the former determining the yield that they are comfortable with, and the latter accepting the average yield of all successful competitive bids. The maximum yield accepted by the government in each auction is known as the cutoff yield. The recent 6-month T-bill that matured on July 6, 2023, labeled BS23113V, showcased an impressive cutoff yield of 3.99% PA, the highest since March 2020. What does that mean for you, the investor? It's simple. Those who successfully purchased this T-bill will enjoy an annualized return of 3.99% if they hold on to it till its maturity date. The immense demand for this T-bill was evident when a whopping 10.5 billion Singapore dollars was applied for a 5 billion Singapore dollar offering, and a generous 1.9 billion Singapore dollars was allocated for non-competitive bids, all of which were fully allocated. Now, why this sudden jump in the T-bill yield? Several factors come into play: inflation predictions, monetary policy shifts, market liquidity, risk propensity, and alternative investments, to name a few. The fundamental rule of thumb is, when T-bills are in higher demand than supply, the yield takes a dip, and vice versa. High yields could be pointing towards investors anticipating a surge in inflation due to the escalating cost of living, specifically food and fuel. Inflation gnaws away at the value of money, leading investors to demand a higher return for lending their money to the government. Another perspective could be the anticipation of a stringent monetary policy from the Monetary Authority of Singapore, MAS, that could hike up interest rates or appreciate the Singapore dollar to combat inflation. Both scenarios would render T-bills a more lucrative investment than other options. A noteworthy shift in the latest auction is that the total issuance of T-bills rose to an impressive 5.4 billion Singapore dollars, a step up from the preceding auction's 5.0 billion Singapore dollars. This event has set a new record for the highest issuance of 6-month T-bills in recent memory. One could speculate that this increase in issuance volume could be one of the factors contributing to the surge in the cutoff yield in the current auction. This theory is further supported by a greater number of applications compared to the previous auction and a decline in competitive bids, as suggested by the median yield and average yield. Notably, during the auction held on May 25, when the total T-bill allotment reached 5.3 billion Singapore dollars, we observed an uptick in the cutoff yield to 3.85% PA, as compared to its predecessor. It seems that we're in an interesting phase where the increased T-bill issuance size might be playing a role in yield dynamics. Stay tuned for further developments and always keep your investment strategy aligned with these shifts. However, bear in mind that this analysis isn't foolproof, as various other factors can influence market sentiment. The yield on T-bills can swing due to technical aspects like seasonal variations in cash flows or changes in market liquidity. Hence, conducting personal research and analysis before diving into T-bills or other financial instruments is vital. To invest or not in T-bills boils down to your investment goals, risk tolerance, and time frame. If you're seeking a safe, stable return over a short period, T-bills might be your ticket. They're also a great tool for diversifying your portfolio and safeguarding against market volatility or currency shifts. However, if you're looking for higher returns over a longer time frame or keen on benefiting from capital appreciation or compounding effects, T-bills might not be the best fit. They may also not be your cup of tea if you want more flexibility or liquidity in your investments. If T-bills have piqued your interest, you can invest in them through primary dealers authorized by MAS. Or you might consider using your CPF savings to invest in T-bills through CPFIS-approved agents like DBS Bank or OCBC Bank. Just remember, be mindful of the transaction fees. Alternatively, you could explore other types of SGS bonds like Singapore Savings Bonds, SSBs, or SGS bonds with longer tenors. These have unique features that might be more in line with your investment strategy than T-bills. For instance, SSBs have no minimum holding period and can be redeemed at any time without a penalty, while SGS bonds offer fixed maturity dates and regular coupon payments for a steady income stream. To delve deeper into SSBs and SGS bonds, check out our previous videos on this channel. You can also visit the official SGS website for more comprehensive information. That wraps up today's video. I hope it's given you some valuable insights about T-bills and how they can potentially be a part of your investment portfolio. If you have any queries or comments, drop them below, and I'll respond as soon as I can. If you've enjoyed this video, show your love by liking, sharing, and subscribing to the Investing Iguana. Thank you for watching, and I'll see you in the next video. Stay safe and prosper in your investing journey.